4, 3.
With numbers which were ahead of street estimates, 9.8% YOY growth, which was ahead of most estimates, which were tuning to around 5 odd percent. There has been an increase in a bunch of costs, including staff, advertisement, promotion spends, as well as other expenses, which offset the decline in raw material prices. The question, though, to Mr. Anil Rai Gupta is how confident he is about the year as we start off, even though we are in the month of May per se. Mr. Gupta, good having you. Thanks for joining in. If you sum up the quarter or the year gone by, and try to think of how comes up ahead, um, uh, how confident are you of bettering what you've done in FY23 over the course of FY24?
Well, it's a very long question, long answer. But I think if you see the entire year, first 6 months, there was a lot of volatility in raw material, and which affected the margins of the business. The growth was coming, but the margins were affected. But over the last 6 months, with a little bit of a tepid consumer demand, but we've seen stability in raw materials, and hence there is improvement in profitability also. So I think it's a mixed bag if you look at the entire year. So we are quite happy with the overall growth that the company could achieve. We believe that in many of the businesses, we've been able to gain market share. Lloyd, in fact, grew almost 50% last year. And what we've seen in the last 6 months, the stability in the pricing, raw material pricing, and all the sort of disruptive actions which were there, like the star rating change for fans and air conditioners, that's also gone through in the last 6 months. So I believe that, that gives me the confidence for the coming year that hopefully the consumer demand, which has been a little bit slow in the last 6 months, with the real estate now doing well, should start picking up in the coming year as well. The raw material prices, if they continue to remain stable, should help the margins coming back to normalized levels, which they were before this volatility in raw materials for the last couple of years. So I think overall, I'm quite positive for the coming year.
Okay, just so now that I've got the picture for the whole year, just a quick near-term few questions. So Lloyd, while it remains in the top 3 brands, which is a great thing, but just the fact that one AC inventory, I believe, was high at March end due to the weather change, and the fact that on the call you said that the delayed summer can impact demand. How does this set the stage for what you would do in Q1?
I think to some extent, this March to June period is a lot dependent upon the weather. Hopefully it's a great summer. The tertiary demand is very strong, and we've seen that in a few days during the summer also. But we've seen more unprecedented rain this year as compared to in the past. So right now March and April has been muted as compared to what we would have expected. How May and June goes, we still have to see that. But definitely it has affected the demand for summer products in the last couple of months.
Okay, what about the other segment, Mr. Gupta? I'm just trying to think, because, for example, you spoke last quarter about how pre-buying of fans did not benefit Havells because you are present in the upper end of the segment. The buyers and the other segments as well saw an improvement, but there was high cost inventory which might have impacted the operational metrics there. So how about the other segments shaping up?
I think overall the other segments, switchgear has done well. As I said, the real estate demand has started picking up. The infrastructure and the industrial products are doing better. Underground cables, professional luminaires, industrial switchgears, they're all in a better shape. As I said, the consumer demand had been sluggish over the last 6 months, so which has affected both fans and appliances. Hopefully, with real estate doing well in the last 6 months, in the coming year, that should also start kicking in. So it's a mixed bag, but I think gives positive signals for the coming times.
And no issues around inventory in any fashion, which might have a bearing on what Q1 or Q2 might do, I reckon.
Not really. As I said, for the summer products, there was high inventory at the end of March, has been continuing in the month of April, because anticipation of a good summer, we continue to anticipate a good summer in the coming couple of months. If there is an issue, then there will be some adjustment in production levels in the coming times. But I think overall inventory levels are not really a big concern.
Okay. One last question. I know you mentioned twice already about the real estate demand now starting to shape up. I'm just drawing this back. This is the last question on the interview to a comment that you made a couple of quarters ago, wherein you said that because realty or the construction companies were not wanting to buy the high cost inventory. They were deferring the demand, despite the fact that actual demand might have been there. You reckon that will be an issue that might come up, or even that is out of the window completely?
I think with raw material prices now stabilizing, I think that uncertainty of buying behavior is going away. And that has also been reflected in the fourth quarter, both in cables and wires and switchgears. So we do anticipate a normalized demand in the coming times.
Okay. I understand there is paucity of time, so I'll leave it this time around. Hopefully, do a slightly extended conversation the next quarter. Thanks so much for talking to us today.
Thank you, Neeraj. Thank you.